Hi, friends. Rick, the Money Max guy here. I'm glad that you found your way back to learn more about how the Money Max account is rapidly eliminating debt for folks all across America today. In this video, I'm going to basically answer a question about, she asks here, she says, I've been paying on these credit cards for years. Why doesn't the balance seem to be going anywhere? Well, Miss Colleen, that is a great question and a pretty popular one too. The Many families have been drowning in credit card debt for years with really no life preservers around. Hopefully, at the end of this video, you'll have a much more clear picture as to why. And so we're all familiar with how loans work. We borrow X amount of dollars, and the lender allows us to repay a specific amount each month for a specified time. However, when it comes to credit card debt, many kind of stay stranded on that island for decades. And I believe it's the one type of loan that most people have no idea even how a monthly payment is calculated. So if you were unaware, well, then this promises to be an eye-opening video for you. So, hey, but let me go ahead and put this out there from a legal department. This is not about any particular credit card or any particular credit card company. We just want to teach you about how each of these companies calculate their monthly payments. So also, if you haven't already, be sure to subscribe and ring that notification bell. You're not going to want to miss any of the education that we put out on our channel. And if you find this educational segment a little interesting, be sure to like and to share that video with someone that you care about. Let's help your community to get off of that island. What do you say? All righty, so here we go. All right, so let's take a look at this credit card for, this is how we calculate it. Before I start, let me ask you a question. Can you have two credit cards in your wallet, both with the same credit limit, both with the same interest rate, but one be good and the other not so good? Well, what you're about to discover may shock you a little, because the answer is yes, you absolutely can. And knowing this piece of information can be the very thing that you need to find the financial breakthrough that you've been hoping for. So, another question. If someone were to ask you how the minimum payment is calculated on a credit card, would you be able to walk them through the math formula? Well, today you're going to be mighty surprised. And so let's see if we can help you do that from now on. Okay, so how do they calculate the payment? Well, let me go ahead and click around on a few buttons right here and get this thing to operate for you. And so let's go ahead and start by giving this credit card a name. Okay, for this, we'll just go ahead and say plain old Visa. And then what we'll do is we'll enter some balance on that card. And for this illustration, we'll say $10,000. And even though the credit limit doesn't have anything to do with the monthly payment itself, I'll go ahead and I'll enter in a total credit limit for you too. For this illustration, we'll say they've got a limit of $12,000. And then we're going to want to go ahead and put in whatever the card's interest rate is. Well, today that big rate is usually around 29.99 for most of these cards. And so, okay, there we go. We now have all the numbers we need to calculate the minimum payment itself. But, okay, but where do we go from here, right? All right, well, if you wanted to tell someone about how that payment is calculated, you'd actually have to tell them that it's really a combination of the interest that you'll pay each month and then some percentage of the principal balance. All righty. And so let's just start with just the interest portion first. This is what that math formula would look like. So we would take that $10,000 balance and then we would multiply that times the 29.99%, which will equal the annual interest amount. We'll then divide that number by 12 for the amount of months that are in a year. You then have what your monthly interest charge would be. In this case right here, it would be $249. Oh man, that's ugly, isn't it? The $249, that's nearly $3,000 each year just in interest on this card alone. Okay, so let's take a look at how the rest of the monthly payment is calculated though. So the other part of that monthly payment is actually the percentage of the principal balance. This is the amount that your lender requires you to pay each month in addition to the amount of interest that you're going to pay. For the longest time, It was a value that ranged somewhere between 1 and 5%. The higher number, the better for the consumer. The lower the number, the better for the bank. A higher number meant that you were going to have a higher monthly payment, but it also meant that you were making some pretty decent headway when it comes to paying that card off. The lower percentage rate meant that you would pay on that card for a much longer period of time. For this example here, let's say that the bank is charging basically just 1% of the principal balance back. All right. That means that your monthly payment would be $349 is what it would be. And so okay, but today, what percentage do you think that banks are charging you now? Well, this is where it gets so difficult. You see, most people give very little attention to this number. Although when it comes to that monthly credit card payment, it's probably one of the most important numbers that's there. This is the amount of money, okay, that you're going to apply to principal each month. And what you're about to learn is why it seems almost impossible to get out of credit card debt. You see, in March of 2020, the federal government, well, they passed the CARES Act. You guys remember that, right? Because of Corona. But let me explain what that meant for your credit cards. And then you get to determine whether that's something that's helping you or not. So the act was designed to provide stimulus relief to millions of Americans, individuals, and businesses alike. You probably remember it. It included things like the PPP and the ERC and the EIDL loans, and there were some additional insurance-related provisions as well. But in addition, it provided the opportunity for consumers to forego payments to creditors without having their credit negatively impacted. However, included in that legislation was language designed to allow creditors more flexibility to help consumers make their payments more affordable, while seeking to protect the financial stability of the creditor as well. So this allowed many credit card providers to increase the interest rate above the margins at 24.99 that had been customary for so long. They were now allowed to raise that limit all the way up to 29.99. It was labeled in the legislation to make payments more affordable. So with one signatures, lenders were allowed to raise the interest rates above what was the normal and customary. But at the same time, because they wanted to be able to help you, they were able to reduce the required principal amount that was previously 1 to 5%, that they could now take it down as low as 0.25. So what would that potentially look like? Well, if you reduce that down to 2.5, what that would do is that would have helped you save some money. It would have reduced your payment down to $274. And so, but is that helping you? Or do you actually see the peril that's inside of this? You see, you could have cards in your wallet like this one here right now. The bank is getting $249 of interest. They were able to get even more interest after COVID, okay? And you're only making on this $25 a month of headway. Look at how ugly that is. $25 out of a $275 payment, only $25 is going to the principal balance. Well, so if you just do some simple math right there and you divide that $10,000 by the $25, you can start to see how many months it would take to pay off a credit card. For the record, that's 400 months on this one, a little longer than your 30-year mortgage. And folks, this is what our current normal is today. And so there's a TV commercial from a bank that asks, what's in your wallet? That's a good question. Do you really know all the payback details for each of the credit cards in your wallet? Well, would you like to know? Okay, Miss Colleen, this one's for you. So here's a way for you to find out. You can actually use this QR code right here and schedule a call. The advisor is going to actually just send you a worksheet is what they're going to do. And we're going to take that data and then we'll enter it into the MoneyMax account to see if any of your credit cards are like the ones that you're learning about today. And if you'd like, we'll even show you how quickly you can eliminate all those credit cards with little to no change to your current budget or lifestyle. And so that's going to do it for me today. Miss Colleen, I hope that I got to answer your question. Thanks again, folks.